Hello my fellow investors and welcome back to another update when it comes to the CPI. Guys, today as of October 13th at 8:30 a.m. CPI came out for the month of September, and well, you guys probably saw the thumbnail and you're probably like, what just happened with that? What is that? It looks like a smiley face. It's completely U-turned. And it's actually fairly interesting because I was actually watching this live when CPI was coming out, and yeah guys, CPI actually came in hot at 8.2% for the 12-month percent change. And even that, guys, core CPI, which is what the Fed uses, essentially it is all items minus the food and energy, came in at 6.6% as well. And that made markets, guys, completely haywire to the point that, well, all markets completely crashed, going from around like 11,000 points coming all the way down to like 10,500, 10,400 points. And unfortunately, in a normal economy, something that isn't completely crazy, this would have remained low or gone lower. However, as of around 9:30, as soon as market opened, the market just decided to take a complete U-turn and skyrocket, ending the day, guys, up 11,029 points, which is around 2.21% in the positive. So it literally went from like 2% in the positive pre-market down to like negative 2% as soon as CPI came out. So that was an absolute change of around 4%. And then going from like negative 2% all the way up to a positive like 2.24%, so another change of like 4%, and at some points it even got higher to the point of like 3% or so. So this has been completely haywire, guys, and this is kind of, honestly, I don't know anymore. I really do not know anymore. Guys, CPI, as I said, 8.2% for the month of September, and this isn't taking into account the higher gas prices. Now, looking at this, guys, we can see that the main issue, once again, was actually food. Food rose overall 11.2%, even though energy actually remained at around 20% for the month of September. Now, if you guys have been paying attention recently at your gas pumps, gas has gone up by around like 10 cents or so. And the fact that inflation rose by 8.2%, sure, it was 0.1 lower than that of the previous month, which was 8.3, guys. Think about it. The fact that inflation rose and the price of gas was still somewhat low in the month of September, think about what's going to happen now for the month of October, now that energy and gasoline has actually started to come up. It's going to be an absolute massacre. But still, guys, that completely does not explain this entire insanity that just occurred in the market. It just completely U-turned, which is just insane. And that got me thinking, why in the world did this happen? Well, Dow, Nasdaq, S&P surge after hot CPI print as Wall Street comes to terms with hawkish Fed. I call major BS on this, because this to me is sounding as similar to like the inflation is transitory and or the interest rates hikes are already baked into the markets. Remember when that was happening, guys, that the market just completely crashed and then like it just completely skyrocketed because it was baked in. The interest rate hikes were already baked into the market, and then it turns out that it wasn't. So I think that this is just all going to come crashing down, especially since the Fed will not probably stop increasing interest rates. So I think eventually we will see the pain when it comes to all of this in the next upcoming months, I would say. But this to me just seems like a lot of nothing for the market to swing from like +2 pre-market before the CPI came out, down to -2 after the CPI came out, and then up to +3. It got to the point of like close to +3% throughout the day, which is just insane. That's a swing of like, what, 9 percentage points overall, like an absolute, which is just absolutely insane. So overall, guys, that is essentially the CPI for the month of September. As you guys can clearly see here, one more time, I'm going to show you the table. 8.2%. It is lower by 0.1 overall, but nonetheless, guys, it is still a significant jump overall. And the inflation that the Fed looks at, which is the core inflation, actually rose even more, right? All items less food and energy increased by 0.6% in September, up 6.6% over the year. So yeah, guys, I think we're going to see a lot more pain ahead, especially seeing that if the Fed keeps increasing those interest rates, bond yields will continue to rise, and we're already at like 4.5% on some of these yields already. Could you imagine if the Fed continues to raise rates and inflation just isn't stopping, and these yields will reach 6, 7, 8, 10%? That would be absolutely massive. That would completely destroy the markets. And I don't think that this comes to terms with hawkish Fed will last at all. Anyways, guys, that's pretty much all I want to talk about in this video. And yeah, it's going to be an interesting a couple months, or at least fourth quarter if I do say so myself. That pretty much does it for this one, guys. Like to feel like, comment, subscribe. It really does help out with the algorithm on YouTube. You guys can follow me on my new tech sites, link in the description below. So with that said, peace out, and I will see you all in the next videos. And guys, also tomorrow on Friday, make sure to stop by, because I would actually like to take a look at a bunch of earnings report for all of these banks. We got JP Morgan, Morgan Stanley, Citigroup, my favorite Citigroup, Wells Fargo, Bancorp, PNC, and First Republic Bank all having earnings. So let's actually see if these banks are going to tell us anything about this upcoming couple months, because remember, banks are essentially the ones that drag the entire markets. So be on the lookout for those videos, guys, this Friday and throughout the weekend. So with that said, peace out, and I will see you all in the next video.